So the question from Dennis is really related to how we view the morning, and specifically what we're kind of looking at in context of where could we have various ranges. And so I made a statement this morning that is being asked about or being questioned about. Here, let me mute something here right now. Okay. And specifically, the question's up in trading chat, and he's asking, can we elaborate on the main drivers behind comments that we made? The first one is, if we move above 60.40, then we're seriously long. So let's take that one first, and then we'll take the second question next. So this is 60.35 and 60.40, and what's important, I guess, about this picture. Here, let me make it just a little smaller so you can see what it's on the right-hand side here. So we have the 0 DTE selected here, and why that's important in the bigger picture is that we've isolated this down just to what we're seeing here for the day. So Captain Condor is back in mass, and he's got a fairly large, at least 28,000 contract IC per leg contracts sitting at 35.40 and down here at 59.15 and 59.10. So that's given us effectively short calls and short puts at the indicated strike. So here, remember, we adjust for known short interest, and I went into the logs and into various sources last night and looked at this in some detail. And so we have a super high degree of confidence that the 35s are the short legs, as well as down here you can see that the 59.15. So this forms a fairly strong dominant structure that overlays the entire structure for today. So the comment was that if we break above this level, now this level is important. The term is overloaded, and it occupies a number of our levels that we have at GammaEdge, right? So we have the 0 DTE call open interest. That's what this green dot is here, and this is the strongest call open interest in the structure today. It's not going to change, not unless we get an update from Oprah coming in that changes the distribution of this, and that's extremely rare. So what this means is that if we're below this, that level is out of the money. If we're in it, which is important to the conversation, to answering the question, if we're above this, then we're going to be in the money. And so what do we know about calls that are in the money? They have positive charm. And so the comment that I made this morning, if we are above 60.40, then we are seriously long. So getting over this hump is going to be a significant hurdle for today, because right now it's in the overhead. That's the first thing. But two, these are just huge amounts of volume or not volume, of OI that are sitting there, that are exerting their second order Greeks on us as we go through the day. And that's important in the sense that while we are below this area, these things are going to, for the calls, they're going to continue to decay, which is a negative type of charm behavior. So that's going to be an overhead, headwind in our face as we try to advance upward. Now, it's being offset to a certain extent by the charm effects of the closer strike, which is here at 60.35. So I don't want to rule anything out here. I don't want to rule out that we can't walk up the overall chain here, and that we could, go much higher than what we're seeing here. If we break above this, I want everyone to see we would be coming from a very, very large net OI And as most of you are aware, I pay, huge attention to the net OI column because that really defines the structure. It's price invariant. It's defined purely by OI, hence the name net OI. And the net OI gives us kind of that view of what the OI surface looks like as we move up and down various strikes. So we're coming from a very, very large amount that's sitting right here, 28,000 contracts to the call side. And then we drop on down to 4,500, and then it's green from that point up, but it's a declining, what we call gradient. It's coming down off a very, very high peak, coming down off the mountain, and we'll have some momentum. So I want everyone to think through the mechanics of what happens. Remember, gamma is maximum at the money, relatively speaking. And so as we go across a very, very large gamma strike, just in isolation, let's forget about the short strike that's here because that unbalances things a little bit. But let's just, for all intents and purposes, let's just think about what's happening as we come across this strike. What's going to happen is that we're going to effectively propel ourselves up at the gamma rate, and from this morning where the yellow line was, we already had significant gamma that was associated with these levels. Now that we're up higher, in fact, I'll just go up here and we'll refresh just so we can take a look at this, and we'll see what it looks like right now, right? We're at 6,007, so we're a little bit higher. So the line's up, and let me just check, go to the 0 DTE here. Okay, here's the 0 DTE, and you can see from a gamma perspective, here's the gamma distribution. Right, it's going to be a bell curve centered about the yellow line. Right, it's greatest at the money, but it's the term is convolved, mixed, multiplied. I don't know, however you want to say it, with whatever the OI surface is. And in the middle, where we had designated this before, we didn't have a lot of OI. This is why Drunken Sailor is in this particular range. Right, so why this is big in the kind of the big picture, or the big context of things for us today. If we are able to get up into this area, if this yellow line starts advancing, encroaching, pushing upward towards, we're going to see gamma in this area really start to grow. So as price goes through here, Dennis, what happens is that we get a additional push upward, and as we go through that strike, that literally those deltas get pushed. They're called deltas. So we're now additive on just the normal delta change. We're now additive on gamma, forcing more deltas into it, and it's going to force it at a rate. And as this line, the yellow line, gets closer and closer and closer up here, these numbers are going to grow. So the impact of the deltas, when you have literally this net OI of this magnitude that we're seeing here in the picture, let me make this a little bigger for you. What we're going to see is a big push as we come across that 60-40 strike, and that's going to be fairly significant, right? And so the comment that we would want to be long, if we're able to break through here, would be to take advantage of that, effectively that dual strike here that we're seeing at 45, 60-45 and 60-50, which has got a lot of gamma that's associated with it, and that'll likely propel us up here to the 55 and perhaps the 60 area. We don't think we're going to go a lot higher than this. If we do, it's going to be purely on market dynamics, meaning the vol M will tell us that we're showing upward or pushing upward, and we'll also see vol D speculation really start to push out. We don't have a lot of closures that are going to occur up there from the put side of the equation. It's all going to be driven by these folks who are out of the money call holders right now, and by the way, they're losing money because these are all decaying in overall, their overall deltas. Right now, if we push upward, these folks are likely going to want to hold, thinking that they could actually go in the money and have these things limit out to their terminal deltas by the end of the day. We'll see. So, first question, summarizing. It's the structure above the iron condor with a significant amount of net OI, which will contribute to a large gamma. That large gamma could propel us upward north of 60-50 to 60-55, perhaps up into 60-60, and we'll just have to wait and see what we see there. So that's the first part of the question. Dennis, I hope that addresses it. Yeah, general comments today, once you get a monetization level with a big net OI up at 60-50, should there be much profit taking there? Sure, and we'll go look at Vol M here, and we'll talk a little bit more about profit taking. But you can see the COTMC value, the updated one, is at 53. And what that's basically telling us, that's the balance point, the theoretical balance point, where the deltas out of the money equal the deltas in the money on the call side of the equation. So these, what we've seen in the past is that these become increased areas of monetization, the COTMC. As we get further and further above that area, people are more inclined to take their profits because you have the out of the money call balance. That's what the cumulative out of the money calls. It's where they start equaling all of the deltas that are inside or below in that are in the money in this particular area. So the main point is that once we clear the IC contributing to the upward momentum, now the IC offers a complication, a wrinkle into the overall structure, and that's because one leg is short and one leg is long. And for a short call system, literally you can see what Gamma is doing in here. That's what this red bar and this green bar is. It flips very, very quickly. You get by itself, you get a huge shift in Gamma as we're coming across. What I was describing earlier, you notice I didn't pay a lot of attention to these large magnitudes that are inside the IC themselves. This is a 5-wide IC, call credit spread on the high side. And the reason is there's almost a negation that occurs as you get outside of it. It's biggest in the middle, no question, both from a delta perspective as well as Gamma and the other Greeks. But as you move above it, then the other parts of the structure take over, and the same thing below it, right? So to answer that part of your question, I'm not ignoring the IC. The IC is incredibly strong today, and it has implications for both up here as well as down, at the lower range. The question you asked, though, is better taken in parts, and the part that I think you want to focus on is that if we know the IC, if we take it as kind of a theoretical black box, that it's only going to really be active inside the 60-35 to 60-40 range. That's not a true statement, but let's just first hand wave that and say, okay, if I'm in that area, we get some funky things going on. But if we get outside of that area, the rest of the structure still applies. It hasn't gone away, right? And so what do we see? We see a lot of runway on the call side of the equation north of where that IC is, and then that helps us, really start pushing north or pushing us upward, and that's what the overall belief is there. Now, to your other part of your question, you asked. The second is that the 59.95, 59.90 area below DEX minus trans level is relatively weak. Below this level, we become increasingly bearish, but we note that the 59.85 starts to form a put-dominated net OI ledge, and as long as we stay in or above that zone, we will have significant support below us. All right, so let's go take a look at that, because that's an important consideration also that I think people haven't really internalized what's happening. So this is, again, the view from this morning, the pre-market. So 8:05 Eastern time this morning was when I posted this. And what we have here is this blue box is the color scheme that we use for the DEX, the delta exposure, which really has power in the 0DTE. In fact, we're going to be releasing an update to the web tool just to draw the 0DTE DEX structure, because we want you to at least pay attention to it, right? So what we're saying is, so if you can't read the strikes, this is 6,000, 59.95, and then 59.90 is sitting right here. Now, why this is important is you can see inside of this area, we're just kind of back and forth. And these are really small numbers relative not only to the IC, but just to other numbers that are inside the net OI. Remember, net OI does not change during the day, and it's not price sensitive. It's OI sensitive. It is the structure. It literally is the structure on top of which we must navigate. We have a vol M thing that we'll talk about here shortly that overlays it, but the structure is the structure is the structure. And one of the things that for the new folks who come in that don't really appreciate, they think that the new volume coming in completely wipes out the structure, and I'm here to tell you that is further from the truth than anything. It does not wipe out the structure. It gets certainly overlaying the intraday volume has implications on the structure because some of those contracts stick, and as you know, we call that the spaghetti on the wall type of thing, but not 100% of it. So the structure through the day is a very, very good reference point for what we're seeing. And what we're seeing from between 60.25, which is where this 83 is, all the way on down to the first strike here at 59.85 is we've got just back and forth, back and forth, back and forth. So those are contained zeros. When you have a color change, you have a sign change. They have zeros in there. Zeros are weak structure, just by definition. And if you look, by the way, this is the version that I just updated when I started the talk here at 12:14. You can see those numbers are the same numbers, right? Here it is with a little less clutter around them. And you can see this area is really, really weak relative to the area that we have up here and relative to the area that we have down here. So just by itself, we have identified a delta transition area where we've got just weak structure and noise pushes us around. So why is that important to your question? Well, you can see at this first one, the 59.85 that we have here. We jump from a very, very small amount out to, I don't know if you can read it, but if you go look at the notes this morning, this is a little over 1,000 contracts to the put side, and there's a minus sign in front of that, so it's dominant to the puts. This strike is being controlled by the puts. Why that's important is that we have observed, and we've been talking about this, that if there's not a lot of market dynamics going on at that time, if there's not a lot of volume from, you can go look at our centroid graphs, for instance, and the volume centroid, if it's in the 100s or the 200s, typically that's not enough. And especially if the calls are dominated, that's going to be favoring the upside. If the puts are in the minority below the green line in the volume centroid, then we're not going to get down here. We're not opening enough new puts to the downside to overcome the charm that is being generated by the decay of these puts. Remember, these are out of the money puts when they're below the line, when they're below the gold line. That's a positive charm flow, right? That's supportive to us. And if we don't get volume that can overcome that, we're not moving down there. It's just that simple. We're not going to do it. Now, once we start getting, just like we saw yesterday, right? We had a comment from a member yesterday, that the amount of volume that we're seeing actually wasn't all that high, but it was relative to the structure area that we were in, right? It was a very, very large, and then knowing that you're going to encounter some large spikes, if we get downward spikes in volume that start looking like, 500, 600, 700 on the put centroid, that is enough to get us up onto that ledge. So the comment that I made, but we note from 59.85 starts to form a put dominated net OI ledge, and as long as we stay in or above that zone, we have significant support behind us. So as long as we stay in or above this range, we've got the decay below us, which is going to support us. But let's think about what happens if we get put volume coming into the complex, right? If we get put volume, real negative deltas coming into the complex, then that's going to overcome just the normal positive charm we have from the decaying puts. And if you have negative deltas opening in your book, we're going to have downward pressure. That's the way it works. Right? So now we're going to start to see the gold line come down. If that gold line starts coming down, we've jumped up onto, quote unquote, the ledge. Now the ledge is comprised, the way I called it out this morning, I called it out here at 59.85, and I also bolded 59.75, or at least I think I did. I don't have my notes up here in front of me right now. That's because we have 3,410 contracts, net contracts to the put side sitting there. That's why I drew this big line right here to draw your attention. That's a big ledge. That's a big step. So while this stuff here is out of the money, it's supportive. But if we get intraday put volume coming in magnitude, right? If we get another rip-roaring sell-off like we had yesterday, where we had significant put volume coming into the complex, and I'll jump over to the Vol M here in a second. We'll take a look and see what it actually looks like. Then we could get up onto this ledge, and then it becomes a slippery slope down. We have a couple places here that could offer. Remember, if we can't overcome these big dislocations here, or these big jumps in net OI, we're probably going to stay in that particular area. But if you get a lot of negative deltas coming in, we could blow through the 5950 area, and then that opens us up to the magnets that are down here at the lower side of that call, or excuse me, of that put credit spread from that IC. And don't forget, looming out here at the end of June, we also have another large JPM short call magnet, which is sitting down there at 5905. And although it's still out in time on the calendar, it is exerting its influence on us right now in the form of wanting to draw us down here. And there are a couple things that are also attractive to us once we lose this, right? So if you think through the mechanics, as we drop through price, and we drop through the strike chain here, we now are capturing more and more. Remember, these are put controlled strikes. As this gold line drops through here, we now shift from an out of the money stance in the overhead, in the right hand plane, to an in the money. More of these puts are going to be in the money. When these puts become in the money on the right hand plane, now their charm, because they're in the money, is growing more towards negative 1. That's going to be heavier. We start that downward acceleration where we're effectively, and you remember there's a gamma distribution here. That's going to get shorter and shorter, or narrower and narrower as we go throughout the day. And what's going to effectively happen is that we're going to lose any visibility to the calls. They're going to be so far out of the money, they're going to be irrelevant. And all we're going to see are the in the money puts, and that they're going to have a negative charm, which is going to sit on us and keep us down in this particular area. That's why we think we could roll down this if we get enough volume during the day. We think that's the key. We think that you need the intraday fear and greed volumetrics, and we can measure that through Vol D, Vol M, Vol U, in combination with the overall structure that then traps us in various areas. If we can see that, and if we can, watch for that during the day, then we can have an idea of how to play this, right, and how to move there. So my thought process here in saying what I said is that if we stay above this key range, then we're likely playing up in this area, because we'll have all of these decaying puts that are supportive underneath us, right? They have a negative delta, but that negative delta, because they're out of the money, is decaying. It's getting less negative. If it's getting less negative, it's getting more positive. Same thing. In our book, we're getting more positive on deltas. The dealer's getting more negative. And as a result, there's going to be a hedging response to keep us propped up in that particular scenario. But all bets are off. If we drop below these large areas here, then we're going to have in the money puts above our head with a decreasing range of where the charm is going to be impactful. That's really represented to a certain extent by the width of what you see here. Again, let's go over here to SPXP, and you can see it's getting narrower and narrower and narrower as we go on the day. And that is normal. Eventually, when we get into the afternoon session, it's going to be just concentrated right around the yellow line, wherever the yellow line is. And if that yellow line is down in this area, all we're going to be looking at is put dominance in the right-hand plane and the left-hand plane. That's going to be really, really challenging for the bulls to take control and get us out of that hole. So excluding any big new volume down, the structure is supportive down to 59.85. I would say yes. I would say yes. Time of day matters, Dennis. No question about it. But I would say yes, in general, we are supported down to the 59.85 just because of who's controlling those strikes, starting at 59.85, which is right here, right? That's where the gold line was this morning. And then you can see down below that we have all of these puts that are decaying. Hopefully that was useful. You are welcome. My pleasure to do this.